Welcome to another edition of Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Horse Cattle Call is being brought to you by Wolf Auto, small town strong. And I'm broadcasting from inside my car because when we do this program on a Wednesday, we're in the middle of a blizzard and we have no electricity. A big shout out to all the linemen out there because they're the ones that are going out there and trying to restore power in so much swath of areas that do not have power. And of course, to our cattle producers as well. We know that a blizzard is not something you want, especially a wet, heavy blizzard during calving. So our thoughts go out to you and your safety of your livestock as well. Joining me today is Joe Kooima. Joe is filling in today because Brad is probably somewhere warm as we speak to take a look at what we see in these markets. And I wanted to kind of revert back, Joe, a little bit to what we saw last week because $9 cash kind of at the 11th hour on a Friday with some good news for those in the north.
Right. Yeah. Thanks for having me on this afternoon. And I guess I can just catch myself chuckling because, the backtrap that you're in, I guess we can kind of laugh about it now, but, kind of a serious situation out there too. But we got to do what we got to do here to pass some information along. Good question to start. The cash market last week just crazily higher. Last couple weeks been working down, and we maybe caught ourselves a few weeks ago where Packers kind of showed their hand and needed some cattle. Last week they definitely needed some cattle, and there's a few cases around here where cattle bought Friday, they wanted on Tuesday, and maybe even took them on a Monday. So pretty close to the knife. So this is all in the back of a marketplace that has seen Packers cut back on the hours the last several weeks too, to try to attempt to maybe pull some cattle up and back them up a little bit, but that's just not the case here. And this market, so far this week, is anticipating another good stretch here on the cash market. And the market's doing wonderful things today. $140 to $180 higher, and guess what? I don't have any real cash bids to throw out there by any means. So we're still middle of the week here. You can have those Wednesday, Thursdays where we back up, and we're just not having that here right now. So we're anticipating a better cash market, but it's hard to say exactly. I hate saying how high it could be, but I don't know where a starting point would be where I would tell my customers to ask for cattle right now.
So having said that, Joe, I mean, you look at the way the futures have traded, and obviously we've seen some new highs that were set again this week. We had a down day in the trade on Tuesday after a really nice, surprising Monday. How do you, I mean, as a cattle producer, look at these markets, try to decide what you're going to do, and wonder, where do we go from here?
Right. A lot of those questions the last little while. And guess what? I don't necessarily have the answer of how high this thing can go, or if we can keep going at this pace. I usually try to simple it down and say, 3 weeks ago, this market was $15 to $16, $17, in some cases lower than where we are at now. Cattle market also will be it'll maneuver a little bit when it gets in a drastic situation, like maybe being too overdone to the bottom side or a little bit overbought, which we are definitely, the stochastic number, we're hitting our head on a ceiling right now. But we are doing this when everything but April is making new contract highs. So then you get the funds to step in here and buy it to push it higher because the chart looks phenomenal. But from a marketing standpoint, I guess if I had some guys asking about October, some of those months, I would be saying, hey, there's a lot of money on the line here right now. Keep it simple. We're overbought. Bull markets are forgiving. We're not going to keep this stretch higher going on and on and on. We will have a correction, and yesterday we started to have one a little bit, but it came back really well. So those are a few of the conversations having this morning with a few customers on what to really expect. And I guess I wish I knew, but these are great prices. It's a big turnaround from 3 weeks ago. I would definitely utilize this look at some marketing opinions here.
So then let's be the elephant in the room. Is there the opportunity, or unfortunately a chance, for a fear of a sizable sell-off to head our way?
In the last 3 weeks, I think we've had 1 or 2 days where the market has had some kind of a correction. And this is after $15 to $17. It would be healthy if we would have a pullback. And I don't think it's got to be as drastic as the one that we had prior to that we broke $17. That happened in a hurry, real quick, like just much like this rally had happened on the way up to. But how we caught ourselves with the cash market the last 2 weeks, it's really difficult to say that fundamentally it would have to break really far. But having a $3, $4, $5 correction probably isn't out of the line right now. And it could scare people a little bit. It'll probably scare me too, watching it on the screen, because it does happen quick when those sell-offs happen.
Consumer demand, though, really hasn't backed off.
No, not at all. Around here, I think maybe we're a little spoiled. Some of these advertisements are $9 for a strip loin, ground beef under $5, $4. That is one chart that I would like to see, would be our in-home demand. I don't think we can really measure it to a certain degree. I mean, we can all look at the fast food restaurants and the high-end restaurant sales. I mean, those are typically easy to track, but this at-home demand, I think, is a monster of its own. That's huge, and I don't think we have the capacity to, well, certain capacity, but I think we're just underestimating the power of that.
Well, as we wrap it up today, obviously you and I aren't talking ahead of the cattle on feed report. Do you have any expectations to what those numbers might say?
The low 80s for placements. I mean, I don't know if anything is too far out of line. You got to take a look at last year too. We had the month prior, we had a huge weather event. Our placements were down big time. And then last year for this month, the placements were high because they had a little catch up there. So that's why that number for placements is down quite a bit. I don't know if it's really going to skew a whole lot of things. And even if it does come in at a higher placement pattern, all you have to do is really take a look at the cash feeders and what they're doing. I mean, there's a fear of missing out. There's just high price stuff because there's just not a whole lot to pick from.
What is the best way for folks to get a hold of you?
Just give us a call here on phone, 1-800-358-3047, or check us out on the website, kkvtrading.com.
All right, that is another edition of this week's Cattle Call. First Cattle Call is being brought to you by Wolf Auto, small town strong. And as always, a quick reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Cattle Call right here on the Rural Radio Network.